Good afternoon and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be looking at RingCentral, Lam Research, and Glaukos. But first, let's take a look at the major indexes. I'm Justin Nielsen, and along here with Ed Carson, we're going to be talking about markets today. Looks like we had kind of a better close than things we're looking at the beginning, but still off today. S&P 500 down about 0.25%. NASDAQ down about 0.25%, and the Dow Jones Industrials basically flat, down 0.1%. The Russell 2000 was kind of showing up 1% today, so that was kind of a surprise. I wasn't expecting that with everything else looking the way it was.
Yeah, it seemed to chart its own course throughout the year, like lagging a lot of times, and then having some of these days. But the Nasdaq sold off again. I mean, all the indexes did, but Nasdaq, especially some of those software growth names, they did not have a great start. But then after the open, they started rebounded somewhat. I mean, we didn't close at the very highs. The Nasdaq actually briefly turned positive.
Yes, yeah.
But you can see that we ended higher. I mean, it's definitely the way you wanted to see it. If you have a weak open, strong start, that's definitely more of a pattern of bull markets.
Right, exactly. As opposed to the not so great scenario where you start kind of strong and then by the close you're at the lows, and that doesn't give you a real sense of confidence in what's going on in the market.
I mean, you have to keep in mind is that this action back and forth. I mean, we're back basically at record highs, and a lot is going on. We got Apple after the close today, AMD, a lot of earnings tonight, tomorrow morning, tomorrow night.
The next week, really.
Next week, the Federal Reserve has its rate cut, and they're going to talk about things next week. You also got China trade talks wrapping up. So there's a lot going on. These things are like, there'll be little squiggles that we really aren't going to notice probably in a few days.
Okay, so let's talk about some of the stocks. RingCentral had earnings, gapped up right through its buy point. Buy point was around 126.03. It gapped up, opened at 137. So how do you handle a gap up when it goes right through that buy point?
Well, you use the opening price as the buy point. I mean, it can be scary buying an earnings gap because it's like, boy, it's way out there. It's exposed, like beyond the normal buy point. But it can also be a sign of a real powerful move. RingCentral, it had actually just closed in a buy range yesterday. It was really sort of nerve-wracking because it was down most of the day. I mean, so it would have been, you don't know how it's going to react. So if you had bought it ahead of time, you're really going into that kind of roulette situation. Yes, if you had held on to it, well, you'd be thinking you're great. But this is why you wait until the earnings gap.
Right.
It can be risky to buy in the earnings gap, but it's even riskier
to buy before.
Right,
and it was kind of strange that there was a lot of volume in RingCentral yesterday. I mean, of course, there was more today after the earnings, but there was a lot yesterday, and volume was kind of mixed a little bit. It seemed like it was tracking heavier on the New York Stock Exchange for most of the day, a little bit lighter on the NASDAQ, but volume is definitely something we take a look at, and it's a little bit more difficult, especially in the summer months or like when you have a Fed announcement coming. Sometimes things will quiet down a little.
Yeah, not too quiet on RingCentral though.
Right, exactly. Okay, let's go ahead and take a look at Lam Research. Now, Lam Research, this is in the semiconductor group, and the semiconductors have actually held up pretty well.
Yeah, they have, and Lam Research is one of a number of stocks, chip and otherwise, that is reporting tomorrow that are in or near buy zones. Last I had looked at it was just above a buy point, but honestly, we have earnings tomorrow, so if it's a little bit above, a little bit below, the stock is probably going to move quite a bit one way or the other. Like a lot of the chip space, this one has had declining earnings. It's supposed to have declining earnings again. It's a bet that the chip industry is going to rebound later this year. There's some encouraging signs. But that isn't going to be, you're not going to see it with this earnings report.
Right. Now, a lot of times with the semiconductors, you actually see negative earnings growth or even, sales growth that's not that spectacular. Is that a concern? Normally it's not what we're looking for, but semiconductors are a little different.
It is, because there's such a big swing and people can see it. It's sort of like it's this freight train coming in. You can tell it's coming. There's going to be stronger demand and stronger pricing. And so you just know that in a few months, this is all going to generate huge earnings. So yeah, it does have that weird situation. Normally you want to be looking for really strong earnings and earnings estimates, but this one, often you just want to be looking for that earnings estimates.
Yeah, okay. And kind of switching into biotech, Glaukos. Now, Glaukos, they make stents that help treat glaucoma, and they've got earnings coming up August 7th after the close, it looks like, and they have kind of another one of these base patterns forming. Not something that you can necessarily act on right now because that earnings is so close, but it is right there by the buy point.
Yeah, and along with Lam Research and all these other stocks that are near buy points, this is why we talk about either buying on an earnings gap or taking an options play. as a way to try to get in there, but limit your risk because you just don't know. I mean, what if Glaukos says, you know what, Europe says we're not going to allow these anymore, and all of a sudden it goes down 20%. You just don't know. It's acting well. It's been just hovering right below that buy point. It looks like it wants to go, but maybe it won't go.
Right.
I mean, we have earnings in a week where you wouldn't have that cushion. It might break out, and then you have the negative news, and so that's why you need to protect yourself.
And then, of course, we have the Fed announcement tomorrow, so you and Ken will be talking about that. You'll kind of give your color, see what happens, and how the market reacts to tomorrow's action. So be on the lookout for that tomorrow. And if you haven't already, make sure that if you'd like, you can go ahead and subscribe to our IBD newsletters. That's something that a lot of people don't realize we have. You can get these IBD newsletters delivered straight to your inbox. We have a lot of different topics, and a lot of the editors are kind of going through these and kind of culling the best of IBD and delivering that right to your inbox. And of course, if you haven't already subscribed to some of our social media, please do that. Facebook, YouTube, Instagram, and Twitter. All four of those, we have a presence on our social media pages there. So that'll be it for us today. Please tune in tomorrow. Thanks for watching.